Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Back at the market site with us in Times Square, we have Caleb Silver. He's the editor-in-chief over at Investopedia. It's great to have you with me, as always, Caleb. And we have a new report coming out, Investing 2020, and we can see that on our first slide here. You have to tell us all about this new report.
We are looking at 2020. Obviously, we're coming on 2020, but we wanted to look at the next 20 years for what that meant for markets, for personal finance, the global economy, and fintech. And it's remarkable to me and to us that 11, 12 years ago, this wasn't even a thing. And now basically we run our whole lives through our phones and through our mobile devices. So we started looking at ways that we're going to interact with markets, specifically the personal finance world, the economy, and fintech, and what that transition looks like as technology evolves. So why don't we take them one at a time?
All right, so we're going to go to our next chart here. This is the future of markets, something that we are particularly fond of over at the Nasdaq market site.
Right, so I was able to have a great conversation with Adina Friedman, the CEO of the Nasdaq, about what she sees the future of the Nasdaq and markets in general, and what that's going to look like. So a lot of things are happening, not just at the Nasdaq, but all over, but it's a good place to start. So fractional shares, that's already happening with some online brokers where you may not have the money to buy a share of Berkshire Hathaway or Amazon, but you want access to those stocks, to those equities. So more and more exchanges are offering fractional shares, just a little piece, a 0.005% if I wanted to get involved with that kind of a stock. Frictionless trading, this is a big deal for Nasdaq. They've been trying to remove friction between the traders, between people investing in the markets and the market makers, and we're going to see more and more of that as technology enables faster trading, less costs, and we're already seeing costs compressed down to zero for some of the online brokers. Access to private markets. It's not just about the public stock market anymore. The public stock market has been shrinking over the years, and that's going to continue. The private markets, accessing companies pre-IPO that are just private, is going to be an interesting way for investors to interact with the markets, and then using AI to improve performance, to get data, to root out cyber attacks. Artificial intelligence is going to have a huge impact on the markets in general.
All right, let's move along to the future of fintech. I'm particularly excited about this one.
Right, so fintech has come such a long way in 10 years, it's come such a long way in 2 years, and what we're seeing more again is from the product to the consumer, it's a consumer experience that a lot of fintech companies have catered their offering to, knowing that consumers, users really like user interfaces that are friendly, that help them learn, and we're seeing more and more of that. And we're seeing it go from now consumers to platform, where you see platforms offering all you can eat in a personal finance type of environment where I can do my investing, I can do my saving, I can do my budgeting, I can manage my financial goals on a big platform. And then we're seeing the big generics, the rise of the Walmarts, if you will, of fintechs that are offering it all in one place. So consumers are very loyal to their brands. We've seen that with Apple, we've seen that with Amazon. They're very loyal to their personal finance apps, and so we're going to see bigger and bigger platforms offering all you can eat.
Okay, let's take a look at the future of the global economy. Now this one's interesting because there are a lot of variables.
Right, so we could have chosen 100 different variables that are going to dictate what the next 20 years looks like in the global economy. But things that started to stand out to us in our interviews with experts and in doing our own research was China 2025. China has made a promise to itself and a pledge that it'll be the technological leader by 2025, and it has put all its eggs in that basket, and the government is doing all that they can to enable that. India, obviously, has an enormous population. It's a mobile-first population as it relates to consumption, and so the rise of India and how they will interact with commerce and how they'll interact through their phones is going to be a key thing to watch. 5G, everybody's talking about 5G and ultra-fast internet and what that means with a fully connected planet. That's everywhere from developed economies to to underdeveloped economies, where 5G is going to connect everybody and make commerce and make interaction much faster for everybody else. And climate change, this is a big one, obviously. We've been living in the world of a fossil fuel economy where GDP is predicated on the consumption of fossil fuel and our use of gas and digging for oil. That's changing. We may be at peak oil. Climate change is going to be the big unknown, the black swan for the next 20 years for the global economy.
Okay, let's wrap it up with my favorite, future of personal finance, a topic near and dear to my heart, as you and I have spoken about several times.
Right, we talk about this all the time, and the new retirement, it's not about the old retirement that maybe our past generations or our parents grew up with, where you put 40 years into a company, you had a pension and you moved on. The new retirement is the reality that people are living longer. And they may end their main career at 65, 70, but they have 20, 30 more years to live, so they pick up other careers. They pick up side gigs, side hustles, part-time jobs, ways that they can make money without it. So what does retirement look like, and what do drawdowns look like once you think you've saved enough money? Do you have enough money to retire, and what does that mean year by year as you draw it down? And then the future of financial advice. We've obviously seen the rise of big financial advice companies through robo-advisors, the Betterments of the world and others, Fidelity obviously and Schwab, the big ones. But the future of financial advice is important because as consumers and as investors, we're not just looking for investment advice, we're looking for holistic financial advice. So we're seeing that on platforms, through robo-advisors and others, and we're seeing it through the human advisor evolving their skill set so they can help us with college planning, retirement, starting a family, and investing. And then home buying. This is a market that needs to compress in terms of time. It takes too long, and it's too hard to do a closing on a house. Home buying, scoping a home, getting the closing documents, and coming to close is going to change profoundly, we believe, in the next 20 years. It's going to be fascinating to watch.
All right, Caleb, thanks so much for everything you do for the industry and for us as investors.
We appreciate it.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.